But Nasdaq was down once again today. It's only been up two sessions here in 2025 out of eight. So six sessions, the first one, and then the last five have been down. The Nasdaq was down 44 points today, or 0.23%, closed at 19,044. On lighter volume, you can see here the big volume day, and the subsequent days we've had lighter and lighter volume. So I changed, my market conditions, from dead red to yellow because there are some pockets of strength here in this market and some areas that are doing well. And I don't want to be so, passive that I miss on those. But clearly, the technology stocks are being sold. And so the Nasdaq is now looking worse. And that's why I say you need to be flexible in this market. And if you're not flexible, you're going to lose some moves here. Whoops. Excuse me. I just wanted to point out here the Nasdaq kind of doctored up the annotations there. I just want to point out yesterday that low was 18,831. That's a 7% correction from the 2000, 2000, yeah, 24, 2002-04 high of December 16th. So peak to trough, 7%. That's a decent correction. And it looks like we had a little, double bottom base going here. As you didn't see it, after Powell spoke, it really sold off, had a little rebound, then back to the 50. Then it had another rebound, and I thought that double bottom was just going to take out that old, 20,204. But now the last five sessions it sold off, sliced the 50, made that low, and now today looked like it was going to bounce and close lower. But a couple things here that are encouraging. Bear with me now. The Nasdaq made that low and held that low from Monday, 18,831. So that's our low that we need to watch. If it starts making lower lows, then we have to reconsider. But the Nasdaq is not the area, the place to be right now. And I'm going to get to this here. I'm going to try to go through some of my thought process here. All right. So yesterday on the SPY filled the gap from the election high of 576.74. You can see yesterday it closed, it traded down to 575. So there is the gap fill, 576, 575. Couple other things here. It closed higher on Monday. So this is the first day of a rally attempt, and today we were up. This is day two, so we could have a follow-through day as soon as Thursday. I'm not counting on it. I'm just saying this is a possibility. So you have to be open-minded and flexible enough to dive into some stuff, or you better have a watch list ready to buy if we do have a follow-through day. If you don't own anything now, or if you're just holding stuff, that's fine too. But technology is not the place to be. I'm going to get to that in a minute. And then the Dow Jones Industrial, similar to the SPY, except for it made the low and then bounced and closed near the high on Monday. So that was day one of an attempted rally. And then today's day two. So it could have a follow through day. It doesn't have to be the NASDAQ. Any one of these indexes has a follow through day. It's go time. And I guess I got to mention the IWM because it made a low on Monday as well. So these indexes all made lows on Mondays. This is day two of an attempted rally as well. So not going to disregard this. I am going to look at our Batman stocks. These are the technology names. Broadcom, just still, just kind of, flagging here, this little pennant formation, pulling back to its 21 here and kind of squatting the past couple of days, just flat on the session today. While the Nasdaq was down, Broadcom to me looks the healthiest of these, Batman stocks. Apple, gosh, every day there's a report that Apple's iPhone's not selling well, or there's some some sort of bad news for Apple, but it's selling off. And this is what I want ahead of earnings next week. Netflix is going to report, and we have a deluge of technology earnings. So to me, I want them tamped down a little bit, not trading at all-time highs going into earnings, so we can have a little upside surprise and we can pop the champagne, have a little party, maybe, perhaps. Tesla, this one looks pretty good to me. I mean, it was below the 21. Today it powered through it and then closed, near the lows. Today was not a good session for Tesla. There you go, the gap higher in the morning, the old okey doke. And a lot of folks jumped on that, then man, closed near the lows. One thing about Tesla is you saw how it gapped up and it came back and closed the gap. So it's just, 400 is going to probably give it some resistance here. It'll probably, hang around there for a little bit until it doesn't, right? But Tesla still looks good to me, not as good as Broadcom, but better than Microsoft. I can't even look at this chart. After hours, they said they're, I don't know, not retaining some folks. Anyway, layoffs are prevalent here. I think Zuckerberg said the same thing at Meta Platforms. He'll say or do anything. He's a chameleon just to get his stock going. Which, as a shareholder, you can appreciate that. But this one is pulled back to the 50 again. I mean, it just keeps doing this, right? Back to the 50, back to the 50, back to the 50. So it's got to have some catalyst. January 29th is earnings, obviously 2 weeks away, and probably be the catalyst to either, trade higher or, pull back. We'll have to wait and see what Zuckerberg has to say on the call. Amazon is looking a little better than some of the others here in this Batman trade, but it closed below its 21. It is below the 21, in between the 21 and the 50. Google, yeah, well, that's right at the 21. Yeah, this is just not the place to be. They're selling tech right now. So it's just really tough to be owning these things. I would recommend not owning them if you're a trader. This is tough to trade. It's going nowhere. I did mention Netflix. They're reporting earnings next week. Selling off, diving below the 50 ahead of their report on the 21st, which is a week from today. So at this time, next week, we'll be talking about Netflix, either roaring higher, the king of streaming. I think they're going to do pretty well. They got the sports now. Netflix got it going on. But right now it's just selling off ahead of earnings, and that's fine. A lot of profits to be taken here from 677 to 941. Take some off the table ahead of that earnings. It's too much risk to be holding heavy into earnings. Anyway, that's it for the Batman stocks. I got to get to stocks and not just the indexes and the Batman stocks. I do have a couple other hardware names. Micron, ugh, just a mess. It did make that low of 89 following its earnings, but just having a hard time. Pure Storage, PSTG, another one of these hardware names. This one looks a little better, consolidating within a base, trading sideways. Volume drying up. Yeah, I kind of like that one. And then Seagate. Ugh, these ones look rough. Anyway, sorry I brought that up. That's what looks horrible. Anyway, I'm going to move on. Going from the hardware names. How's SMCI doing, by the way? Oh, boy. All right. I put a couple new names on the list today, and this is Wix. Looked like it was going to break out, but the market was kind of ragged today. It does have this RS rating going, pointing higher. You got the blue dot because it's showing strength in comparison to the index. So let's take a look at a 5-minute chart on Wix. Yeah, it looked like it was really going to ramp here in the morning. Nice textbook breakout, then pulled back. Still finished, pretty strong here. I'd have to say, 5.25% is a nice day when the Nasdaq's floundering around. It's flipping and flopping like a fish out of water on the concrete. The Nasdaq just, yeah, horrible. All right. No, I shouldn't say horrible. It's been worse. It's just choppy, tough to trade. PEGA is another one that I put on the list here, computer software financial name. Obviously I like this first trip to the 50 since the breakout, trading, kind of tight within the base here. I think it'll break above that 97. Obviously, that 100 going to be a key psychological barrier or resistance for Pegasystems, but that stock looks good to me, and that's why I put it on. All right. A couple other, relative strength names in the market. NBIS. This one made this big move up to 38, pulled back to the 21, found support, and this one looks really strong. Obvious relative strength line heading due north. A CLS, Another one of these strong electrical contracting manufacturing names broke out. Classic cup with handle breakout. Now surfing the 21 like Kelly Slater. That looks fantastic. And then, oh, Pearson. It's not a stock that I have ever traded, but I don't know. It broke out, uh, sliced the 50. That was it. It broke out, pulled back to the 50 for its first time, undercut it, and now rallied today 2%. So anyway, let's move on. I've got to get to what I really want to talk about here. I talked about the rotation from the technology names, and they're going into these energy plays. Obviously, the oil and gas names are like shooting fish in a barrel, and these data center energy plays, which GE Vernova is one. I think this is the leader, of its peer group. They have earnings next Wednesday, the 22nd. Something to watch out for. This one, 357. Obviously, it, broke out of a base, ran up to 357, consolidated within this base. You can see 29 days. Anyway, pulled back to the 50, found support. Looked like it was going to break out, but general market weakness pulled it back to the 10, and now, today up 4%. That is a nice move. VST, Vistra is another one. Just this is textbook here. Consolidating within this cup with handle, trying to break out market weakness, and I think on another day, this thing could have really ripped, but still up 5%. You can't complain about a 5% move, but it was really ramping in the morning, then kind of sold off into the close. But you can see there, man, this thing looks like it's ready to jump higher, I would say. TLN is another energy name. They had a deal with Amazon, like that 230.89 is what I would consider, that high there, a point of interest. If it could get above there, nice blue skies is just a nice little consolidation pattern here for TLN. I like it if it could break out of that box. And I'm not going to put that on just yet. Like to see it tighten up within the base, little lighter volume. But hey, it was up, nearly 4% today. Not too shabby. Another energy name, Constellation. This group, 6 out of 197. So definitely a strong stock in a strong group. Had news last week. These guys, government contract, got that 288.75. I was going to put this one on the ready list, but it's extended from the 10, and I just want to see it calm down a little bit. And if it decides to come down and close that gap there, that gap fill at 267, I wouldn't mind that either. If like pull back to the 10, that could be an area of interest as well. But it's just kind of hot right now, a little extended, but definitely one I'm watching. Not the leader of the group. I don't think GE Vernova is. So, like I say, they're all going to be reporting earnings soon. So we're going to hear from them. We have been hearing from the JP Morgan Healthcare Conference, some companies that are, there's been buyouts and companies raising guidance. There's been trial data. A lot of news coming out of and TG Therapeutics last night. Listen to their call. Mike Weiss on the call. Um, raise guidance, raise sales guidance, raise earnings guidance. Now, they got to go year over year, not quarter over quarter. They're growing quarter over quarter, like 20% or 25%. But their, benchmark here is 44 million, and he said they're going to have over 100 million. Their first 100 million quarter. So you're going to see a triple-digit sales growth and earnings. They're going to earn nearly $1 in 2025. They guided to, I want to say 550 million for 2025, sales. That's pretty impressive. And that's a sandbag number. I'm sure they're going to do over 6. So, yeah, you can see these guys are ramping here, sales. And yeah, a lot of it is expected. I wouldn't say a lot's priced in. I mean, and then technically you can see it needs to trade above this downtrend line. So it's got some work to do to get above the 50, get above the downtrend line, but it's definitely a stock to watch. Up 7.5%. Lilly today came out and they they raised guidance for 2025. The CEO said they're growing at 32% in 2025, which is all great, but they lowered guidance for the coming quarter coming up. So they're kind of warning on February 6th, it's not going to be as great as expected, which is fine. It sold off 6.5%. But he did say that they're okay. First of all, they have the GLP, weight loss drugs. They have obesity and diabetics. Okay, so the weight loss drug is eating share from their obesity and diabetics drugs. No pun intended. So the GLP-1 is kind of cannibalizing some of their other categories. That's all. And so, I did read a study over the weekend that in the United States, 2024 was the first year that the obesity rating went down since like the 1970s. It's been like 50 years. And it's a result of, a lot of people on these GLP-1 drugs that Novo and Nordisk and Eli Lilly are manufacturing. So that's a good sign. America's getting a little trimmer, a little healthier. But like I said, the CEO said the GLP-1 drugs are eating into diabetes and their obesity catalog. Anyway, Lilly is the leader in this group. Novo, kind of backslid on that news. Still there around 80. It's retesting that 81.50 from that failed trial from a couple weeks ago. So anyway, that's what happens, when you try to, cherry pick, bottoms, they just kind of test and retest and they kind of, lounge around down here and loiter at their old lows. All right, I'm going to move on because I have other stuff. VRNA, another one, at the JP Morgan conference. Now I forgot what they said. Oh, well, doesn't matter. They're up nearly 4%. BBIO, I believe they had news. Yeah, nice pop here, breaking out of this stage one base. If we look at a weekly chart, yeah, BBIO, nice breakout this week, up 22%. If you like, these are speculative biotech names. This is Excelis. This is not speculative. They do have earnings and sales consolidating in the base. I kind of like this one. You like for it to quiet down, but yeah, it undercut the 50, now rallied back above, had an inside day today. So EXEL looks pretty darn good to me. All right. I'm going to move on to, some of the building heavy construction names. This is what I'm saying. It's not just technology. They're selling the AI stocks and they're spreading the wealth. This is how, bull markets sustain themselves over time as you rotate into other areas. This is Argan. Building heavy construction, kind of a thinly traded name, 309,000 shares average daily volume, but consolidating in this cup with handle. I'm sucker for breakouts, but it's a pretty tough market for breakouts, but up nearly 8% today. So that's a move not to be ignored, or it's a chart not to be ignored. MTZ, another one of these building heavy construction. You can see the group is a top group. You're looking at a top stock and a top group. Nice little flat base pattern here, and then it pulled back quietly to its 21, then popped today 4.5%. So that's another nice move. I still think that's actionable around that 150 level. What else do I have? PRIM, Primoris. This is the top performing stock in this group last year in 2024. Obviously, it had this downtrend and undercut the 50, now rallied back above today. I like it. This is another a pattern that I like, another stock that I like, and they might be showing up on our Reddit list here soon. All right, I'm going to move away from the drugs, the energy, the construction, and go to what I like. I like to eat at Bros. And eat is another one too. Touch Bros, there's only two really retail restaurant stocks that I like right now. This is one of them. Why? Well, it broke out and it's surfing its 21. Made a new high today. I'm a sucker for new highs as well. Stocks that make new highs tend to make subsequent new highs. So pay attention to the Dutch Bros. They don't report for a while, another month. And then I did mention Brinker International, eat. This one is just surfing, man. This is the one where if I bought it today at 143, it'd probably pull back to the 50 tomorrow. So I stay away from this, but it doesn't know that I'm going to buy it. And so, you really should be buying it on pullbacks if you want to own a winner and a leader and a retail restaurant name that's making new highs. If you want to be in that group, I think those two are definitely to own. I don't know, a lot of people were harassing me about Texas Roadhouse today. This doesn't look good to me. Trading down to its 200 Shake Shack. No, thank you. Slicing the 50 Wingstop. These are looking pretty yeah, broken. Kava was another one that had a good year last year. No, thank you. Sweet Green down to the 200. So these there's only two left. And so you're thinking, man, they're probably going to get them too. And that's why I wouldn't be chasing here. And if you're looking at bros, I would just wait for their earnings call, see what they have to say. And if you have to pay higher prices, so be it. All right, got to go to the defense names. Like I said, the rotation is the like I don't want to say the mother's milk of a earnings is the mother's milk of a higher stock prices, but just the rotation in a bull market, it's healthy to sustain longer term appreciation. How about that? KTOS, Kratos and Defense up 6% today. You can see obviously blasting higher with volume. Another name in aerospace defense that I like is GE. I'm still consolidating within a base, but what did it do? It rallied, it undercut the 200, undercut the 50, undercut the 200, rallied through the 200. Now today it rallied through the 50, and I think, that's kind of a buy right there. To me, that's breaking above its downtrend line, breaking above its 50. The RS line is trading through the index average. So to me, that's a buy. Um, where? I don't know. Maybe tomorrow, above the high of today, if it can do that, 177.90. So anyway, yeah, GE looks good. And then the last one in this group, How I Met Your Mother. Oof. Okay, ooh, just consolidating within a base. I want to get the date of that high, that 120.71 on December 6th. So it's been about 6 weeks here of consolidating, just hugging. That's what I'd call hugging, playing teeter-totter with the 50. I don't know how many of you played teeter-totter. They don't have those things anymore. Anyway, I'm dating myself. I can't help it. All right, moving on. I've got to get to the oil and gas because this is like shooting fish in a barrel, folks. I mean, you just buy one and hang on for a couple of, you don't have to hold very long to make money in these things. They're going higher. And today, what was telling for me was gas prices were down. The Brent was down, the WTI was down, and natural gas was down quite a bit, like 3 or 4%. So I thought, these things are going to get hit today, and they just keep buying them, right? Look at all these blue bars here, blue volume bars. This is EQT. This is an integrated stock. This is not an exploration stock. But you can see the double bottom base broke out, then consolidated flat base for 5 weeks. And that's what I'm saying. You don't need a big base to make a run. And this flat base is doing quite well for us if you own this thing, if you bought it here. I've had this a couple weeks, I believe, but it's getting a little extended now. I got to take it off. Why? Well, it's an oil and gas stock. It's a 5% above its 10. I mean, I think that if you buy it up here, there's a risk that, pulls back below 50 and trades down to this 10 EMA, and then you're underwater. And I'm not comfortable being underwater for too long. I'll drown. I can't swim. This is a Kinetic Holding, another oil and gas. This is transportation, pipeline stock. You could see this 62.55 high there on November 21. So it's almost been 2 months here, about 8 weeks in this base, traded sideways as the volume's drying up here. I really like the structure of this pattern here. I would like to see it tighten up, pull back to the 10 in the next few sessions. And like I said, maybe if we have a follow-through day later this week or next week, maybe that's something that might interest you. It interests me. So how about that? AROC. This is Arch Rock. It reminds me of A-Rod, the baseball player. Um, anyway, made that high of 27.05 December 11th, pulled back near its 50, and now making new highs, man. Just ran right through its 50, pulled back to the 21 and just ramping 6% today. Man, that's pretty. 10% move in 2 days here this week. So this is a machinery equipment stock. So like I say, on shooting fish in a barrel, there's exploration stocks, there's equipment stock. transportation pipeline stocks, there's integrated stocks. These oil and gas stocks are really pumping with energy. All right, here's a breakout. Oil and gas is a transportation pipeline. Natural gas is what you got to watch for here. I think those are the best plays. This one's up 3%. Classic breakout here from a consolidation period. You can look at the consolidation, 26 weeks. So it's been sitting here for a half a year doing nothing. Now all of a sudden this week it's up 6%. So that's something not to be ignored right there. You can see the blue volume bars. Somebody's buying that stock and it's not Aunt Stella. Comstock, this one, mentioned this a few times, and all it does is just pull back, find support, and bounce. This looks like A-Lab from a while back till that crashed and burned. Like I said, these things are not going to do this forever, but as long as the pattern's holding, every time it pulls back to a moving average and finds support, that you can buy these dips, and sell the rips. So that one looks fantastic. That was Comstock Resources. We got Range Resources, broke out of this cup with handle pattern. Anything with the resource now is gold. This is an exploration stock, one of the top 25 groups there. You can see it's been consolidating since I want to say about 2 years here. Even go back to here, it was $37 in June of 2022, so 2.5 years. And now they're starting to move. So don't ignore that. I know some people don't want to buy oil stocks because they're dirty. But anyway, I'm not too proud. I'm here to make money, so I'll pretty much do anything to make a buck. All right, here's a Antero Midstream AAM. It's a morning stock. It gets up early and rises there. Up more than 2% today. LNG, this is liquid natural gas. Transportation pipeline stock. You can see it, that made that 222 in December, pull back to the 50 for the first time since the breakout. That was a gift, and now it's just romping higher, man. These things, like I said, it's like shooting fish in a barrel here. Should have some oil and gas in the portfolio. All right. Okay, KGS. This is one that I like because it's kind of a slower mover, quiet name. Made that high at 44.20. Pulled back below the 21, rallied back above, and today made a nice move. Yeah, Kodiak Gas Services. This is the field services, so different than the let's go to DXPE. This is the equipment stock where they provide pumps, and to the oil industry. Anyway, this one broke out. Every time it pulls back, once again, finding support, bouncing higher. I think this one's going to have trouble at 100. We're going to have to wait and see. But man, look at this breakout and move higher. It's DXPE. I used to trade that way. It was like the number one stock in IBD like 2004, 2005. And just recently it came to my attention, obviously, because it's ripping and making new highs. And then Kinder Morgan. KMI, and I'm going to stop here. You guys get the idea, right? This cup with a handle here, and then breaking out. Another move from Kinder Morgan up 3.5% this week. So yeah, the oil patch is a place to be. All right, I'm going to move on because URI, United Rentals, bought a company today. I was a little surprised at the premium they paid. This stock has been, in the doldrums. It made that high of 896. Right after the election there, 1111, then just has pulled back below the 200. Now today rallied up to it, and we'll see how it handles that technical moving average. This is the company that I bought. Yeah, 100% premium, man. That's a pretty price. I'm surprised URI was up paying that kind of premium. But anyway, I just wanted to point that out. Carpenter Steel's another one I put on the ready list. I think it's a little early, but I want to put this on the in your mind's eye, because if we do have a follow through day, I think this is the type of name that I want to be looking at here. You can see the RS line heading due north. It's got that blue dot. And if we take a look at the weekly, just pull back a little bit, you can see that this little base here is only like what, 7 weeks? Yeah. And had some heavy selling in December, but it looks pretty good here towards the end of December and the beginning of 2025. And this was one of the big winners from 2024. And now it's starting to act better once again. And this is a late stage base, but I wouldn't hold it against it. If it wants to follow through and break through 200, I'm all for it. All right. That's it for me. No, excuse me. I have one more thing. That's the boomer, the boomer trade. They're still doing it, man. They're spending money, flying all over. This is United Airlines. I had this on the ready list last week, but it's broken out and it's extended. Delta Airlines, these airline stocks are doing well. American Airlines, the cruise lines. I think they're giving us an opportunity here. This 258 high, then pull back below the 50. I'm watching for this to rally back through and break above a downtrend line. I think Royal Caribbean is close to doing that. Then we have Carnival. They all look the same here. Norwegian Norwegian Cruise Line Holdings, NCLH. Yeah, they all look similar, consolidating in a base. But if they want to break above the downtrend line, break above the 50, I think that's an opportunity for those leisure services names. And you got the hotels still consolidating. This one pulled back to it's 200. That's Hilton. Marriott undercut the 50. So I'm still all in on the boomer trade. They're booking their vacations and traveling. I don't think that's going to stop. That's another thing that's going to carry through 2025. So a little bit of profit taking here and booking. So I wouldn't let that deter me. This is Expedia, pull back to the 50, then bounce, and then make my trip. This is the leisure service travel booking stock from India, sliced its 50. Uh-oh. All right. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up, except for in honor of the great Steve Jobs. I do have one more thing, and it's not to be ignored. The home builder stocks, KB Homes. These things are incredibly weak. They've sold off, higher rates. Everybody hates them, but I think they're making a bottom here. KB around that 60 level, you know, retraced back to the 60 level. Didn't quite get there, but I think that's your bottom. Like your risk reward here. What was it? 62 on a Monday, rallied up to 67 today. These could be putting in a bottom. Um, the news from KB was pretty good last night, accelerating sales growth. This is a Pulte, and they all look the same, like forming these little bottoming pattern. DR Horton, same thing. You know, this is bottom like about 135 support and Lennar. Yeah, they all look the same. And yesterday might have been their low, just like the Nasdaq there and the S&P made that low and then popped here today. That's Toll Brothers. So keeping an eye on that. Anyway, thank you for watching at mcstockcharts.com. We never give up. Keep an open mind. Stay positive. We could have a follow through day as soon as Thursday on the S&P 500 and the Dow Jones Industrial Average and the Russell, but not on our beloved Nasdaq because they're selling tech stocks to buy other stocks. That's all. It's a simple game. Yeah, you don't want to be in the tech stocks. I mean, most of them are being sold, and it's a pretty tough trade right now. So go elsewhere. Thank you for watching at mcstockcharts.com. We never give up.